Hi guys, welcome to today's awesome meeting. Right? Today we're going to be talking about something very important, very key in the forex market, right? Especially for those of them that do not trade with stop losses and take profit. Personally, I do not advise you not to trade with stop losses and take profit because of the stochastic nature of the market, right? Personally, I trade with stop losses and take profit. But there are some persons they just don't want to trade with stop loss and take profits, right? So in that situation, what do you do? Especially when the market is moving against you or when the market is going against you, seriously, what do you do? Right? So that is what we are talking about today. But before we go ahead, if today is your first time joining this channel, you are not late, right? You are not late. Do well to hit the subscribe button. That's just all you have to do. Hit the subscribe, share to your friends because of the daily analysis, because of the good things coming out. The testimonies keep coming, right? But remember to share to your friends, right? That's the most important thing for all of them to benefit and also capitalize on the daily analysis, right? Share, like, and also comment on the videos, right? So let's go ahead to what we have today. So guess what do you think we'll be talking about today? What do you think? We are talking about nothing else but hedging in the forex market, right? Hedging in the forex market, right? So let's quickly move to what we have today. This is the ability to take the opposite side of your trade or a trade in a currency pair or correlated pair in order to do what? To avert losses. You are taking the opposite side of your trade, still in that same currency pair, but not every time in that currency pair. It can be another pair, but correlated pair, right? Still in that same currency pair, you are taking the opposite side, right? You are taking the opposite side of your trade in that currency pair or a correlated pair, right? In order to maximize also cut out losses in the forex market and make much more profit in the market, right? So this is a very wonderful strategy we'll be talking about today. Now, before going to the chart to show you how this works, note these things to note when you think of hedging or when hedging in the forex market, right? Number one, it works best by a professional trader. This one can never and will never be overemphasized. It works best by a professional. So if you're a novice trader, just take it away from your mind. Take it away from your mind that you want to hedge. Anything like if you're trading forex from 2 years downward, or let's say let's say for the first few months, take away hedging. Do not think of hedging the forex market. It's gonna deal with the person. Hedging is done by professionals, and that's the only way for it to be profited for you, not novice traders. I don't care whatever any other person is trying to tell us or any other thing somebody else is trying to tell you. For the years in this business, hedging is not for novice traders, but professional traders, right? Works with right emotion and psychology. Now, for you to have right emotion and right psychology in any business, you must be a professional in the business, isn't it? Yes. You must be a professional in the business for you to have the right emotion and psychology. So that's why hedging is for professionals and those of them that have right emotion in the business. You must have it. So it's not for novice traders. No matter what, I do not advise it. It's also a way to cut losses in the forex market. It's also a way to cut losses in the forex market. I'm going to show us how it looks like right now on the chart. It's also a way to cut losses on in the forex market. I will show us how it looks like right now. It's also a way to cut losses in the forex market. It is the taking of the opposite side of a particular trade, considering the news coming out in that same pair or another correlated pair. Either considering the news or when the market is technically going against you, right? So I was thinking of explaining this. Let's say, for instance, you are in a position for Euro USD, like you are in a position for a buy in Euro USD. and the market is in favor of the trend. It's in the favor of the trend, like in an uptrend, and the market is expected to buy. You're waiting for a retracement, especially for those of them that do not use stop losses. So you go in, clicking buy in the market. Now, when you click buy, you are expecting the chart to be going up, isn't it? You're expecting the chart to be making higher highs to the upside. But guess what? Instead of the chart to be going high, the chart is now going down. So in that situation, are you going to be making profit or loss? The answer is simple. You are going to be in loss, right? So you that doesn't use stop loss, for some persons using stop losses, if the market hits your stop loss, okay, that's fine and good. But you are not using stop loss and you still believe that the market will go back, but the market is selling seriously. What do? You click on sell. As you click on sell, remember you are in that same currency pair. Remember you are buying, but you now click on sell, and that's it, you are buying and selling at the same time. So doing, you will not secure loss again. All you will have is your trade will be locked. Yes, your trade will be locked at that same position. You will not be in profit, you will not be in loss. What does that mean? The initial buy you entered will be in loss. Then the recent sell you now entered will be in profit. So you'll be making profit here, you'll be making losses here, right? So it's a way of managing losses in the market too. Another way of doing it is like, since you know that Euro USD and GBP USD correlates, right? If you are buying Euro USD, one can decide to be selling in GBP USD. So it's another way of hedging the market, but that one is not advisable. That's why it's only for professional traders. It's only for professional traders, right? So let's go to the chart for me to show you what I'm talking about, because this particular stuff is very, very important. This particular stuff is very, very important. So let's get to the chart for me to show you what I'm talking about. Right, let's go. Hey guys, this is what I'm trying to talk about, right? So let's say you've done your analysis on GU and you wish to go in for a buy. This is GBP USD. You wish to go in for a buy, right? You come here, you go in for your buy in the market, right? So after the buy, you're expecting the market to go up, right? But what if the market doesn't go your direction or your anticipated direction? Because the market has to cross your entry line for you to be in profit. But what if it's not going? At the end of the day, you now see that, oh, the market will take some time. It will sell further before even heading to your direction. It's going to take a little sell before heading to your direction. So at that particular time, what are you going to do, especially when you don't feel like leaving the market? Conservatively, what I advise is, if you take a wrong direction, exit. But there are some persons that would still like to remain in the market. You see that the market might be selling further, maybe towards the support zone or below. It will still keep going lower, right? So what do you do in this situation? Some persons, you now go in for your sell in the market, right? So to hedge your buy, right? So that is what hedging is. You can see in this market you have your buy and sell at the same price, right? So if you see that the market will still sell, so all you have to do is to allow the market to sell to your support zone, or the place you wish, or you feel that the market will sell to. If you feel that the market will sell to this place, you allow the market to get to that sell. Or if you feel that the market will get to this particular place, you allow the market to sell to that particular support zone. Now by the time you get to that support zone, you take your profit for your sell, right? So at the end of the day, you can even end up making something much more reasonable in the market, right? So you take your profit for the sell. Now allow the market to go up, right? When it start going back up, you can now go in again for your buy. So before it even gets to your resistance zone, or before it gets to your initial initial entry for a buy, you have made a whole lot of profit. But this strategy is for professional traders, right? So this is a very wonderful way of maximizing your loss or maximizing your profit, and also end up making something from the market. So hedging is good, but for professional traders and professionals in the forex market. Seen it, right? So that is the way it works. That is the way it works, right? So another thing to note is that it is the taking of the opposite side of the trade, especially when in loss. Taking of the opposite side of a trade, especially when in loss. This is one of the best and conservative way of trading. It is one of the best and conservative ways of taking care of your trade, but must be with professional trading. It must be professional style of trading, right? Must be professional, right? So not only that, can also be the best way of blowing your account. It can also be the best way of blowing your account, right? Especially for those of them that are novice in the market. Those of them that are novice, it will even help you and successfully help you to blow your accounts. So if you know what you are doing, use your stop losses. This is best used by professional traders, right? Must not be done at all times. Even though you're a professional trader, it must not be done at all times. It must not be done at all times, right? Can be used considering only technical analysis. Can be used considering only technical analysis or news. It's not every time you buy and sell at the same price. You buy and sell at the same time. You buy and sell at the same time. It doesn't work that way. Personally, when I want to hedge, I don't use it in that manner. Whenever I want to hedge, I don't use it in that manner, right? Disadvantages. 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 Disadvantages of hedging. Number one, you may not know when the market is about to reverse or when to leave the market. You may not know when to leave the market. Remember, when you click buy and sell, you have to allow the one that is selling to go down. To go down, remember, anticipated direction is for a buy, and you know that the market will still reverse for going for a buy, but the market is selling and you are selling. When that sell is exhausted, you have to exit it, then going back for a buy. The truth is that you might not know, or you may not know when to leave the sell, because by the time you leave the sell, it might still be going down. That one will be hell. Like if you sell again, and by the time you sell again, that might be the time the market will reverse. Yes, you are buying and selling, and you wish to take profit at a particular support for the sell, for the market to go back, and you take your profit at a particular support, waiting for the market to go back. Meanwhile, after taking the profit, you still see the market going down again. Are you going to still hedge again? Okay, if you hedge again, what if you hedge again and the market turns back? That's why it's used by a professional. You may not know when to leave the market. And if you exit early, it's also bad, because if you exit early and the market is going against you, it's double loss. It's double loss, right? Late exit. Maybe another thing is you are thinking that the market will continue selling. Suddenly, there's a sharp reversal or a sharp turn to that your initial buy, leaving your sell in red. You'll be like, what is happening? What is happening? Now, if that buy you initially entered is in favor of the trend, the market might not return for a sell again. So all you have to do is just to leave the market. The market might buy for 1 year, 6 months, 3 months. Meanwhile, you are still in a drawdown. So that is why hedging, these are the disadvantages, and you have to understand how it works. You have to understand how it works. It's only used by professional traders in the market. When used properly, can give you more money than the anticipated amount, right? When you use hedging very well and properly, it can give you more money than you ever expected, right? Let's say you are buying and the market started selling, you hedged and started selling to a particular support, and you calculated the market, you did the analysis very well. You take a profit from the sell that has been selling. Now, when it's going back for the buy, remember you already have a position, one position up. When it's going back to the buy, you can as well take another position again for a buy, another buy here again. Remember, you take it for the sell. So by the time the market is going back for a buy, before it gets to your initial entry, you will also make another profit, right? You can decide to close there, or you allow your initial buy to trigger and continue going for a buy. You can even make 3 times what you anticipated, but it's not easy, right? It's not easy. It's better said than done, right? Ask those of them that claim hedging is this. I will only tell you what I know and only tell you what I do, right? I've been in this business for a long time, so I will only tell you what works. No matter the advice they are giving, it's not that easy for newbies. Hedging is good, but not that easy for those of them joining the forex market for the first time. Personally, I've used it to flip my account several times, but it's not advisable for newbies, right? So this is also another way of making big money in the forex market. It's also another way of making big money, big money in the forex market. It's also another way of making big money in the forex market, right? So you can also use it to make big money in the forex market just by flipping your account. As it's going back, you follow the direction, right? So that is it. Then also remember, you hedge when you are trading in favor of the trend and market tends to do the opposite side. Not that market is going, you click buy or you enter for a buy, market is going in your favor for a buy and you start selling. That's even one of the worst ways to kill. Well, they say there's 1,000 ways to die, but this one is 2,000 ways to die, not 1,000 ways again to die, right? In favor of the trend, you click and the market is going your direction. There's no need to hedge again now. There's no need to hedge. There's no need to hedge. So are you enjoying the video? Do well to share to your friends, comment, like, and also to hit the subscribe button, especially if today is your first time joining. So as a way of recap, we started with the topic hedging in the forex market, right? So we said it's the ability to take the opposite side of your trade or a trade in a currency pair or correlated pair in order to do what? To avert losses, right? Things to note: it works best by a professional trader, right? Works with the right emotion and psychology. That's the number 2. It's also a way to cut losses in the forex market. It's also a way to cut losses in the forex market. It is the taking of the opposite side of a particular trade, considering the news in the same pair or correlated pair, right? It is the opposite side of a trade, especially when a loss. It is the taking of the opposite side of a trade, especially when it's in loss, right? This is one of the best and conservative ways of taking care of your trade. It's one of the best and conservative way of taking care of your trade, right? Can also be the best way of blowing your account. It can also be the best, in fact, the sweetest way of blowing your account. Just be hedging anyhow. That's why it's very good for professionals to go in for. Must not be done at all times. Must not be done. Today you hedge, the next day you hedge. In fact, the more you hedge, it shows the more unserious the person is, because if you know what you are doing, you always get the direction of the market. So anytime you see yourself hedging off, that means the person needs to go through his trade, or to go through certain things again, right? Or to go through his strategy again. Can be used considering only technical analysis or news. Can be used when you consider your technical analysis or news. You are doing that because of news, right? You may not know when to leave. These are the disadvantages. You may not know when to leave a particular position for the other to run. Early exit, late exit, right? So when used properly, early exit, when used properly, can give you more money than anticipated amount. That anticipated amount, maybe you wanted to make $1,000, but when used properly, you can end up making $3,000 that day, but must be used professionally. This is another way of making big money in in the forex market. This is also another way of making big money. Some persons deliberately hedge. Yes, some persons intentionally hedge. Some persons intentionally hedge on a professional ground. They buy and sell at the same time, especially when they are unable to analyze the market. They buy and sell at the same time, allowing the sell to go, they take, them buy, they leave. Some persons intentionally hedge, but professionally, right? That's the secret, but professionally. So, lastly, remember you hedge. Remember you hedge when you are trading in favor of a trend and market tends to do the opposite. Don't be trading against the trend and you want to hedge. That one is very, very wrong, right? So not only that, when you are buying a currency pair where USD is the quote, you can also hedge by selling a correlated pair where USD is the quote, or buying a correlated pair where USD is the base, right? So it's still the same thing. You can either do it in the same pair or in another pair. So are you enjoying the video? Thank you very much for joining us today. Remember to share to your friends for them to benefit from what is happening in this channel. All right, thank you very much for joining us today, right? Go ahead to make much more money and enjoy your trades. All right, bye now.